half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Avril Hong in Singapore.
And I'm David Ingles here in Hong Kong. Let's get to your top stories today. The dollar dropping against most, if not all of its peers, in fact, as traders fret about tariffs as well as the risk of President Trump looking for a way to axe Fed Chair Jay Powell. Now, Beijing stepping up government spending as concerns balance over China's ability to hit its growth target this year amid Washington's trade war. And Ukraine and Russia trade accusations of violating an Easter Sunday ceasefire. That's after the U.S. warns it could walk away from peace efforts if a deal is not reached soon. Good morning and welcome to the show. We're starting things off today with some breaking news. Loan prime rates are out 1 and 5 year. We were largely expecting to see a reduction in the loan prime rates. What we're getting is not a reduction. Unchanged here for both tenors. 3.1% it remains on the 1 year, 3.6% on the 5 year. Marginal reaction there, as you can see. It's really about dollar weakness today, which has taken dollar China back below the 730 handle. Maybe you could make somewhat of a reaction with a little bump up you see bottom of your screens. But that being said, a broader story has really been on melt up in yields and the weaker U.S. dollar as we get underway, of course, this week. We'll revisit the China story in a moment. We'll be talking, by the way, fixed income in a few minutes here with Maybank Asset Management, why they think fiscal and monetary policies may not be enough, Avril, for growth and the global outlook.
Yeah, and I think things are getting even further complicated with this threat from Donald Trump against Powell, right? In the meantime, we have Chicago Fed President Austin Goolsbee warning against efforts to curtail the central bank's independence. And of course, the U.S. president questioned the Fed's decision-making. He also criticized Chair Jerome Powell.
The fact is, the inflation rate is higher, growth is slower, the job market is worse. So I strongly hope that we do not move ourselves into an environment where monetary independence is questioned, because that would undermine the credibility of the Fed.
Meanwhile, President Trump's top economist says he's studying if he's able to fire the Fed chief. Kevin Hassett called on Jay Powell to lower interest rates and suggested that under his leadership, the Fed had acted politically to benefit Democrats. Last week, Trump reiterated his call for the central bank to cut rates and said he could remove Powell if he wanted to, David.
Yeah, and really we're seeing that expressed quite clearly in the FX markets today, really. On your left side coming up on your screens, it's a gap lower we're seeing in the dollar index. We're now trading at about we took out 99. On the Bloomberg dollar index, we are now, in fact, at about, if not lower than the low that we hit back in 2024 September. So that now takes us to within really a sliver of trading at levels last seen about 2 years ago on the Bloomberg dollar index. Euro's trading at 115, give or take here. Dollar Swissy, dollar Japan, now at the strongest level here on the Japanese currency going back to about September of last year. That's a fairly important technical level as well, the 140, 141 handle too. The read across equity markets is, well, for one, when you look at Japan, there is a stronger yen story playing out there as far as the factoring goes in the equity markets. Just keep in mind, and we'll get to some of the other markets that are not up and running today. So volumes are on the thinner side of things. We're off by about 1%, as you can see. U.S. futures and European futures are also being offered up right now. Taiwan is opening up 0.3%. That takes us into the approach to the Chinese Open today. And we're looking at the A50 futures trading. There we go. And we are called slightly to the upside. Dollar China, we talked about this. And Chinese 10-year yield at 165. Right. Kind reminder that you have markets here in Hong Kong, so no Stock Connect. No equity market, no cash trading in Hong Kong, along with derivatives. Also no Australia and no New Zealand markets today. And, of course, things reopen, Avril, of course, tomorrow.
Yeah, and it's business as usual in Singapore. I have with me now Bloomberg's Asia Markets Executive Editor Paul Dobson to kind of talk us through what we're seeing in the FX complex that's this expression now of the concerns of Fed independence. Talk to us about, the implications overall.
Yeah, so that seems to be the latest reason to sell the dollar that we're seeing kind of feeding through into the price action today. The idea being the challenges to the independence of the central bank in general is not good for the reputation of the US. And, the Trump administration has done a series of sort of moves that the market hasn't liked in terms of that trustworthiness, in terms of the reliability of the currency. And so people have been looking for reasons to diversify some of their investments outside of the US. This idea that there'd been so much flowing in for so long, both in the fixed income and the equity space. And now that's slowly unraveling bit by bit. But each different piece of news that we get seems to provide another catalyst. And you can see it not just in the FX markets, where the moves have been really interesting, but also in gold, which is adding more than 1% again today, continuing to pile higher.
Yeah, Paul, David here. I mean, if you could talk a little bit more about the other side to the equation, and I think you underscored the point. It's not just about tariff concerns. It's not just about, well, it is a big factor, of course, the uncertainty over central bank independence on the Fed. There are alternatives right now to dollar assets. I think Japan is emerging as perhaps a yield story now for some big players.
Yeah, absolutely. We're hearing from the Japanese insurers on their investment plans at the moment, and more of them seem to be talking about the appeal of longer-dated Japanese government bonds, the idea of repatriating some of their money from abroad now that they're finally able to get a reasonable yield. And we even saw positive real yields on longer-term Japanese government bonds as well. So that is one factor, but it's not just that. We also heard at the end of last week Chinese investors looking to move money out of the US and into other markets, looking for opportunities in Europe, looking for opportunities in Japan again. And even in this, the emerging market space, I think really interestingly, you have local currency, emerging market bonds, already with lower yields than treasuries, but still in favor from investors, thinking about those currency dynamics and thinking about the idea that they can still get more capital appreciation there because the local or the emerging market central banks are likely to cut interest rates more aggressively than the Fed will be doing. And so flows out of the dollar assets, every which way you look at the moment, people looking for opportunities elsewhere.
Paul, you alluded to this a short while ago about how investors are seemingly dumping all things US. How is that complicating, given what we're hearing from Trump towards Powell, potentially the curve steepening we're seeing and the safe haven qualities of treasuries? Yeah,
I think that's also being challenged, right? And particularly it's being expressed at the back end of the yield curve, where you have seen more of a sell-off, more pressure. And again, I think this morning we're seeing higher yields on the 30-year securities. So there's a little bit of consternation out there. And I think that it's not new, right? I think that it's been coming for quite a long time. People have been increasingly worried about the US debt burden through the Biden administration into Trump as well. People have been worried a little bit about that credibility in the Federal Reserve, and that's still going as well. People thinking about, whether treasuries in general carry a little bit of a risk premium now. So we heard, the U.S. administration has been looking at ways to maybe encourage banks to hold more treasuries on their balance sheets, potentially lightening that load a little bit. But there are those concerns out there just a little bit. I mean, I wouldn't over-exaggerate it. Treasuries, still generally are the first place that people go when they're looking for safety and liquidity, but there are question marks.
Paul, thank you. Paul Dobson there, our Asian Markets Executive Editor in Singapore for us. Now, let's have a look at the other side of the story. And we have some developments coming out of Beijing right now. Responding to certainly this ongoing story, Beijing says it is firmly opposed to any party reaching a trade deal at the expense of China's interest. That follows reports that the U.S. is looking to pressure other countries to curb trade with China as part of their reciprocal tariff negotiations. Let's bring in Min Lo, our China correspondent, covering the China story for us today. Let's start with that response coming through.
Yeah, so this is clearly a warning from China that it's going to watch these trade negotiations very closely. Anybody that undercuts China's interests is going to face retaliation from China. And of course, we are watching very closely. The first to go is Japan, heading into that second round of trade negotiations with Trump. It comes after the presidency just finished his Southeast Asian trip with a consistent message calling on all of these countries to jointly oppose U.S. hegemony. And I want to read you that quote from the MOFCOM statement. It says, to seek so-called exemptions at the expense of others' interests for one's own temporary selfish interests is to seek the skin of a tiger, which will ultimately fail on both ends and harm others without benefiting oneself. So this is interesting because China is kind of alluding to the idea that the U.S. is not a very reliable partner. Cooperating with the U.S. may not necessarily lead to lower tariffs or benefits for those countries. So it's trying to just counter that idea and warn other countries to tread very carefully here. So I guess it's a turning point in a way because it threatens to shift this tariff war between U.S. China into a global one that involves many other countries.
And amid all this, China's been trying to provide a buffer for its economy domestically. And we're seeing how the government accelerated spending in the first quarter, fastest pace in 3 years. How much of a buffer, that extent, is it providing really?
Yeah, so the first quarter spending was up by about 5.6%, the fastest since 2022. And we know that the local governments, for example, has been ramping up the issuance of these local government special bonds to increase their cash flow. The government is clearly trying to ramp up support for the economy. Premier Li Qiang as well on Friday, calling on local officials to think out of the box when it comes to these injection of stimulus policy. And he said timing is very critical. Officials have to act swiftly and early with a well-coordinated policy mix. And what does thinking out of the box mean? I think that's what we are all watching for. And we got a glimpse of that over the weekend as well, because the Commerce Ministry is saying it's going to help companies that are exporting to expand to the domestic economy. And we saw all these big e-commerce platforms that are being called to the rescue. JD.com, Alibaba, Tencent, all unveiling plans to help these companies expand to the domestic economy. JD.com is one that says it's pledging to spend at least 200 billion yuan to buy up products that are meant for export to be sold to the domestic economy.
Now, we're starting this new week, but just a reminder of, the President, she was completed his trip of some parts of Southeast Asia. How do I need to be thinking about how that story evolves this week? Key takeaways from the three-country trip.
Yeah, I think if you just look at his stops in each country, the message has been very clear. In Malaysia, for example, he promoted this idea of the Asian family, calling for calling for regional solidarity. And then in Vietnam, he called on the country to jointly oppose this unilateral bullying from the U.S. And in Cambodia, he penned this commentary, also calling for joint opposition to this global hegemony. I think what's interesting to take away is how President Xi is received in all of these three countries. So yes, there are joint statements for each leg of his stop, but clearly in Malaysia, Prime Minister Anwar was piling praises on President Xi. But in Vietnam, we saw a difference in the readouts between the Chinese and Vietnam readout of the meetings of the leaders. The Vietnam readout had omitted the phrase of jointly opposing unilateral bullying from the U.S. And that shows you how some of these countries are really trapped in a very difficult position, with the likes of Peter Navarro, for example, saying that Vietnam is essentially a colony of the Chinese Communist Party for being an extension of Chinese manufacturing. So some of these countries that are seeking deals with the U.S. will really have to think about how to, not offend both sides.
Yeah, to your point, the Vietnamese Prime Minister called the relationship with the U.S., this unique bond that they have with the Americans, just days after that visit. Min. Thank you so much. Min Lo, our China correspondent there. Right, as we go into the first session of the week, there are a couple of markets, of course, shut here in the region today, so no trading in Hong Kong. We do have Shanghai and Shenzhen coming online amidst really this drift lower across regional equity markets. It doesn't seem like China will be joining that for now. The big story across markets, though, 16 minutes away, is the dollar is falling out of bed this Monday morning. This is the China Show. Good Monday morning from the Asia Pacific. The renminbi fix of the day is out. You're getting a 720.55 handle here. That's again certainly the US dollar. That's your sort of the midpoint of the playground today, plus minus 2% there. Juxtaposed against really a dollar that is massively on offer this Monday morning. In fact, just on that very note, Dixie gap lower. Bloomberg Dollar Index is now flirting with the lowest since 2023. I think we're within a fraction of a point from the low that we hit back in September. Below that, we basically take that low out, and we're now at levels of 2023. Bloomberg Dollar Index coming up on your screen shortly, if not already. The Euro 115, dollar Swissy, dollar Japan. Oh, wow. Dollar Japan now 141. Extremely close to that. So we don't normally see moves like this in the early going. So idiosyncratic issue with the dollar today. Let's bring in Rachana Mehta, regional fixed income co-head at Maybank Asset Management. Good morning, Rachana, and again, pleasure to have you in the show. FX and rates tied at the hip. Dollar assets seem to be on offer. I need to ask you what you think what the impact likely will be on dollar assets amid this uncertainty over, let's call it, central bank independence around in the U.S.
Yes, I do believe that. I think central bank independence is being questioned, but our personal view is that it will still be maintained, and this has been happening over the last couple of years also. So I do believe that U.S. will maintain the central bank independence, but I think the dollar is falling because of a couple of other reasons also, not necessarily because of central bank independence. One of them is tariffs, and actually the other thing, I believe that there's a lot of dollar deposit in all of these Asian countries because dollar interest rates are much, much higher than the rest of the world, and now with tariff uncertainty and a lot of dollar deposits. So people are worried that anyway, dollar interest rates are still higher, but the other countries like Japan and Europe are still giving me better interest rates. So I want to move some money given the geopolitical risk. And that is one of the key reasons I feel the dollar is falling also, not necessarily because of central bank independence. I think a lot of dollar deposit within the region, they are worried about this war, and I think they are trying to convert some of this, and they are trying to diversify the reserves. So I think there are a couple of reasons for dollar falling, and the most important reason is I think that U.S. administration still wants a weaker dollar. I know because they've been saying that weaker dollar is very, very, though they keep talking about strong dollar, but I think weaker dollar does help U.S. companies, because if you look at a lot of U.S. companies, 60% of their revenues are generated outside U.S. So that will cushion their tariff kind of tariff impact. So frankly, they can earn revenues and all these currencies strengthen. So when they bring back, their earnings doesn't get impacted. So I think long term, I do believe that US still wants a weaker dollar over the next 1 to 2 years.
But might that mean a lower Treasury yield? So the 10-year, do we get down to 4%? Is this a good entry point as far as U.S. Treasuries go?
Yeah, I do believe that the current administration is very clear. If you look at Scott Bessent's talking about 10-year Treasury, is the yield level they are looking at. So yes, I do believe that at 5%, of course, we will buy. But at this level also, because yes, we went as low as 370, now back to 4.4, 4.5. So I think it's attractive to buy 10-year Treasuries, or increase duration by using high quality credits. So definitely, I think we cut duration, and now we are back to going long duration, but at the 10-year part of the curve rather than 30-year part of the curve.
Rachana, Avril here. I mean, what is all this going to mean for direction of the dollar? Because I think you have the view that short term it could strengthen. Why?
Okay, the only thing I feel that it will strengthen if people start pricing in recession risk, because generally in a recession risk, it's flight to quality, flight to safety. So there's a chance, because generally because US is the biggest in terms of economy, in terms of consumption, they are the biggest, correct? So if US have a recession, generally rest of the world will have a recession because we are so closely connected. So that is one of the reasons I was thinking short term, if there's the recession chances increase. As of now, people are pricing in 50 to 60%. So if people think that it's going to be 70 to 80%, then their dollar may strengthen short term. But eventually, I do believe that all the local economies will start converting dollars to their own currencies, or say euro and JPY. But I feel that there is a chance if the recession risk is increasing in the US, then the rest of the world will get impacted. And that's why I was thinking there is a chance that the dollar may strengthen short term if the recession risk keeps increasing. And there is no bilateral agreement in terms of trade, correct, with different countries, which US is doing. If that doesn't happen, then definitely there's a risk.
You talked to us earlier about part of your strategy, potentially entry point on the 10-year treasuries. But what about for Asia credit? What do you think still looks attractive at this point?
For Asia credit, I do believe that India looks very attractive, given that India is not that much impacted in terms of export to the US. So I feel Indian credits look attractive. And some of the high quality IG credits like Australia, I feel because they are pretty highly rated. So we stick to investment grade. Mainly, we prefer BBB plus and above single A, double A. So if you really want to look at high yield, maybe we should look at some of the domestic companies which are not impacted by this tariff part. So when you're looking at high yield bonds, you focus on domestic companies which doesn't get impacted by this. So we do prefer IG high quality bonds in the 5 to 10 year sectors in Australia, in Japan, in India. And if you want to buy high yield, we prefer like high yield bonds which are domestically oriented companies.
What type of yield is an offer right now as far as high yield goes? Let's end on that good note. If we're looking for income, for example, where do you think that best fits into, again, to your point, deteriorating global growth outlook?
Yeah. So generally, if you look at high yield bonds in India, is roughly giving a yield of about 7 to 8%. So not bad, correct? And overall, where US Treasury is about 4.5%. So you are getting for a 3-year paper, especially most of the high yield bonds are 3 to 5 year paper. You're not taking a duration risk, and these companies are very domestically driven. So you're getting a yield of 7 to 8%. So not bad for those kind of yield. And I do believe that Asian high yield will outperform in terms of US high, given the lot of uncertainty in the US. And Asian high yield, we have a domestic bias. So a lot of Asian private banks and investors buy their own bonds. So I think that also cushions the downside in Asian high yield bonds.
All right, Rachana, thanks so much for sharing your insights with us. This ever-evolving situation. Rachana Mehta, Regional Fixed Income Co-Head at Maybank Asset Management. Now, let's take a look at China futures. We are seeing earlier a bit of firmness, so just checking in again how the equities performance today might shape up. Indeed, we're seeing very slightly a bit of a positive that gain also in China's 10-year bonds. And of course, the renminbi, dollar China sitting below the 730 handle, and all this against the backdrop of the slump in the dollar that we're seeing in the early goings this Monday. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. Not a lot of risk appetite out there, as you can see. We're looking at this drift lower across most futures right now. 52.77 in S&P. The dollar is also massively on offer right now. Asia off by about 0.25%. A couple of markets are not up and running, of course, today. We'll talk about that later. Avril.
Yeah, we're talking about Hong Kong, of course, that is shut, along with the likes of Australia and New Zealand. But it's interesting amid all this that there is relative outperformance on mainland stocks. And I think part of it is got to do with, this trade war, the idea that there could be more domestic support, maybe in the fiscal sense as well, despite loan prime rates being kept unchanged today. And of course, dollar China still sitting below the 730 handle.
Right, welcome back. Counting down to the open of trade. The agenda today going into the Monday session. 3 things to note here. There is a briefing later today, 3 p.m. local time, on China looking to expand the services sector. Number one, a couple of markets are shut here in Hong Kong, including, of course, the Stock Connect. Within the mainland markets, we're looking at robotic stocks, perhaps as a mover here after the half marathon in Beijing. Suffice to say, the most didn't make it to the finish, but it's certainly a massive leap for robotics kind, if you will, given that first event there. But yeah, going into the open today, we're looking at turnover, Avril. I think because things were shut on Friday, turnover on the mainland was the lowest of the year so far. We are expecting the same today, Avril.
Yeah, a bit more of that follow through, and of course with Hong Kong shuts as well. But overall, let's take a look at how things are shaping up, looking a bit softer on the mainland. And of course, all this is against the backdrop of what China might do in order to support not just the stock markets, but the economy as it faces off with the U.S. We're hearing about how Securities Times reporting Chinese brokerages are helping to boost share buybacks, and a lot of reporting underway as China tries to figure out any form of support for equities. We are seeing, though, a bit of softness in some of these consumer-related names as well as the banks. But what's doing well today, it's the China bonds, whether you're looking 10-year or 30-year. Interesting that we're seeing a bit of firming up when it comes to commodities. And among the sectors that we're watching today, David, you mentioned this a short while ago, there's that briefing underway later today for expansion of the services sector. And a couple of these names, remember, last week when we got wind of this briefing, some of them jumping by 10%. This is the picture you're seeing at the start of trade today. Really interesting in terms of the sectors that we're going to be watching out for. And let's bring in our Asia Equities Managing Editor, Lynn Liu, for all this. We're seeing how these sectors are, of course, in focus, but bigger picture, what are we expecting in terms of Chinese authorities kind of stepping in the way of stimulus or support for the economy?
Yeah, I think one big event everybody's watching out for is the Politburo later this month. The expectation is some economic policies will be discussed, maybe even some more front-loading to stimulus infrastructure. Of course, the other aspect of the stock market is on national teams' participation. We saw last week for 3 straight sessions, national team was there to bolster the market in the last 20 minutes of trading. And the gains were in the end quite small, but it also showed that national team wants to make sure at least the session ended in the green. So yeah, I think that's one thing. And then sectors, as you mentioned, I think consumer sector is actually quite interesting right now. We've heard from the likes of Fidelity swooping in during the market sell-off to say that consumer is, especially consumer staples, is actually quite resilient in this overall sort of risk-off environment. And we've got UBS saying similar things. It's a top fund manager telling us he also buy some consumers. I think in this overall sort of protectionist world, people are really looking locally to see and spot areas where demand will still be resilient.
Yeah, the kind of insulated sector.
Exactly.
So when we look at the sectors we're watching out for in terms of earnings as well, we have the likes of Luxshare, for example, later in the week.
Yeah.
How do you think some of these Chinese companies are going to be responding to these U.S. tariffs or giving us hints of what they might do?
It's really hard, right? It's just I think it's a whole thing globally. The companies may tell you that there's probably very little visibility. It really depends on what China and Donald Trump are going to hash out, how the the final deal will look like and when that deal will come through. One thing people are watching out for is capex. I think that's something to show the kind of planning for whatever information the company has. They can plan forward. And then not just about Luxshare, I think there's also a few other names in Asia that are reporting earnings this week, including SK Hynix. Now that's also a very interesting one because it's in the chip sector, it's in the AI sector, and it can really tell people about AI demand, but also export tariff or export controls, I should say, that has the impact on the chip sector.
It's interesting you raise chips because over this past weekend out of China, what's garnered a lot of attention is the robotics sector after the marathon. What are you seeing in terms of investor appetite and how this sector is being seen as a kind of tool in the US-China rivalry?
Yeah, I mean, the sector has already had a huge rally. It was I think, the best performing sector before DeepSeek that shocked the world in late January. So I think a lot of money has already gone into the sector. That was before the tariff kicked in as well. The idea for this sector is it's, these robotics can be used to address the aging population in China. So it is relatively resilient with or without tariffs. China will have aging population because because nobody is really having kids right now in China. So robotics can help with that. Of course, there is also the competitive side of it with the US. But that part, as you guys reported, these robots didn't really do well, did they, right? So I think it still needs to see what kind of technological advancement will be had in that space.
Yeah, you know, with these frontier technologies, the proof, as they always say, is in the pudding. But really interesting to see how they fared in these races. Lynn, to our Asia Equities Managing Editor. Over to you, David.
Yeah, and I mean, just to borrow Lianting's, you know, how I think 4 out of the 21 robots managed to finish. I think one effectively tripped at the start of the race. It kind of looks like the dollar chart you see on your screens right now, just to the downside there. Bottom of the screens is DXY 14-day RSI, and as you can see, that momentum has drifted lower substantially. We're now trading in the low 20s as far as momentum goes. We've also formed a death cross recently, which effectively shows you that momentum is really to the downside. Suffice to say, though, and just to caveat this, you know, a lot of people that we've spoken to recently do expect a short-term dollar bounce because it is looking like it's getting slightly one-sided to move right now. Certainly, it doesn't help the news flow coming out of the U.S. on the Feds and Jay Powell, and might his job be at risk, and certainly adding a little bit further to the risk premium already baked into dollar assets right now. We are flirting with the lowest level here since 2023, which, if you're curious what the level is, it's the level you see on your screens right now, 12.18, thereabouts there, against the U.S. dollar. Right, now, certainly the dollar conversation, the appeal of dollar assets will feature very highly in a lot of the, I guess, conversations this week. You know, Monday is the IMF, the World Bank meetings, and, you know, what does the global economy look like? And, you know, will the Fed need to come in at some point, not with a put, but really to sort of support the economy with a lower interest rate? That's certainly what the White House wants, just to tie those two things together. Now, back this side of the world, we have the Shanghai Auto Show. We have that covered for you, of course. In terms of data points, you have, I think, towards the end of this week, and I'll tie this into the market conversation. Tokyo April CPI is a very good bellwether and leading indicator of nationwide CPI in Japan. And as you can see, this melt-up in long-dated yields on the JGB space is really now acting as a catalyst to suck money back into Japan. Insurers have talked about that, so we'll see what that looks like. BI rate decision, of course, also coming through midweek. So that's a look at the agenda this week, plus, of course, earnings. Avril, as I think you and Vianting were just talking about there, not so much about results themselves, but CapEx and forward guidance, and really how CEOs in the corner office frame, you know, how visible the outlook is for revenues, given the many moving parts across the macro at this point. Avril.
Yeah, how to provide clarity where there isn't a lot of it coming from the top, the decision makers. And certainly amid all this, we've been seeing these various sectors just being drawn into US-China rivalry. And among some of the corporate stories that we're following this morning, Boeing has begun returning 737 MAX jets to the US that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Meantime, Tesla's planned rollout of its cheaper cars, including a lower-cost Model Y, has reportedly been delayed by at least 3 months. The Reuters report didn't give a reason for the delay. Tesla is due to report earnings Tuesday, with investors looking for guidance on how it intends to turn around its shrinking market share. Plenty more ahead. This is Bloomberg. You're watching The China Show, and as we keep watch on these various geopolitical confrontation and fronts that have opened up, certainly both Ukraine and Russia are in the spotlight. They've each accused the other of violating a short-term Easter Sunday truce declared by President Vladimir Putin, which Kyiv is offering to extend for a month. For more, Bloomberg senior editor Bill Ferries joins us now in the studio. So, Bill, what do we know about either Russia's side, kind of pointing fingers that the other violated the truce.
Yeah, so Russia's proposal for basically a 24-hour Easter Sunday ceasefire took a lot of people by surprise. But the Ukrainian government is saying that Russian forces never abided by that proposal from the very beginning. They say they recorded thousands of violations of that proposed ceasefire all across the front line. Russia as well saying that Ukrainian forces were attacking throughout that period. Ukraine has pushed back and said that they would like to see Easter Sunday be the start of a 30-day proposal, 30-day ceasefire. Russia hasn't responded to that. You may remember Ukraine had earlier agreed to a U.S. proposal almost a month ago now for a 30-day ceasefire. They say they're still willing to go forward with that, and Russia has yet to respond.
And Bill, speaking of the U.S. proposal, we understand that, if you could give us more detail on this, it might include the U.S. recognition of Crimea under Russian control.
Yeah, that would be a huge diplomatic coup for Vladimir Putin. This U.S. proposal that was apparently circulated with European partners late last week that the U.S. is hoping to discuss at a meeting in London this week would include U.S. recognition of Russian control of Crimea. Of course, Russian forces took Crimea in 2014, but Ukraine has objected ever since to them having any sort of formal recognized control of that area. It would also effectively leave Russian forces in control of the areas where they have troops now in Ukrainian territory. So the total would be almost 20% of Ukraine's territory, including Crimea, under Russian control. That's something that's going to be very hard for Ukraine to stomach. The U.S. proposal also calls for ending any discussion of Ukrainian membership in NATO. That's something that has been largely delayed at this point, but it's also something that Ukraine will be reluctant to see completely taken off the table.
Yeah, and Secretary of State Marco Rubio, I think it was late last week going into the weekend, did suggest that the U.S. might be, I think, losing patience. Is that a good way to describe this? It might start walking away from a potential deal. In other words, Bill, is a deal looking further and further away at this point?
But it is looking like the U.S. is losing patience and that a deal is going to be hard to follow through on. The U.S., President Trump said at one point that he thought he could solve the Ukrainian war in a matter of days and 24 hours at one point. This seems to suggest the U.S. really is ready to move on. There are expectations that the U.S. and European allies will discuss this week. But looming over this is not just whether the U.S. walks away from a proposed peace deal, but if they do so, what that means for intelligence sharing with Ukraine or continued weapons deliveries and things like that. So the U.S. threat here is much more than about working on a peace agreement. It's about whether support for Ukraine entirely is at risk.
Yeah, and certainly that's something that we're going to be keeping a close watch on. But it does seem like increasingly the U.S., as you say, is kind of losing patience as we see a lack of progress. Bill Ferry's our Bloomberg senior editor for us there. And amid all this, we're also keeping track on some of these trade discussions underway with the U.S. and some of the countries that have been trying to get perhaps concessions on the tariff fronts. The latest we're hearing, South Korea and the U.S. are set to hold trade talks on April 24th, and this is according to Yonhap News. Meantime, tariff negotiations between Tokyo and Washington are set to continue this week. We have the U.S. ambassador to Japan, George Glass, saying he's optimistic that a deal can be reached.
The Secretary of Treasury, the Secretary of Commerce are both people that I know and have spoken with and are brilliant in their fields. And they're also very creative, out-of-the-box thinkers. And when I saw that President Trump then decided he was going to get involved and has now named this his top priority, that's why I have a lot of confidence that we'll get something done.
NHK is reporting that Finance Minister Katsunobu Kato is scheduled to meet on Thursday in Washington with Treasury Secretary Scott Bessent. And for more, let's bring in Bloomberg's John Herskovitz. John, it's interesting because amid all this, the car safety rules of Japan seem to be drawn into a potential tool with Trump in negotiations, according to reports. I mean, what's the significance of this? What is the odds that it will play out in this way?
Yeah, we're heading into the talks which are scheduled for this week. Japan has floated a couple of things in local media that could be points for negotiation. One is this auto safety measure. The U.S. has contended for years that Japan's market isn't open to U.S. automobiles. The effective tariff rate for U.S. imports of cars is about zero. But there are things like safety measures that and inspections that are seen as non-tariff barriers. So by saying that this is something that is open for discussions could be something that opens the door for a possible deal. The other thing that was mentioned this week are Japan's tariffs on rice. Japan has kept high tariffs, has tried to keep foreign rice out of its market as a matter of food security, part of its culture, protecting its farmers. This was also floated in the local media as a point that could be brought up in trade talks for a round that could happen as early as this week.
Yeah, and speaking of this week, I think Avril just mentioned there, too, we now understand that there could be a date for the South Koreans and the Americans to start talking. April 24th, I believe, is the date that Yonhap just gave a couple of minutes back. What could be on the table there as far as that specific exchange is concerned between South Korea and the U.S.?
Yeah, I mean, with the South Korea talks, which would probably be which would be number 2 after Japan for the big Asian partners. South Korea has gone into these talks saying they're looking for a big type of agreement, things that will address like an Alaskan pipeline for natural gas, perhaps cooperation in shipbuilding. And also, South Korea has a little bit more exposure on certain things. When it comes to auto sales in the U.S., South Korea's percentage of cars that it brings in to the U.S. market from abroad is a little bit higher than Japanese makers. So there's a little bit more exposure there. So that's part of the thing that we're going to be looking at. South Korea has this. But the other thing to consider with South Korea is that it has presidential elections in June. The front runner for the elections, Lee Jae-myung, is a progressive. He's a little bit more China-friendly than the conservative government that has been in place up until the impeachment of President Yoon. So this could be a little bit problematic for the U.S. and also in its negotiations with South Korea. The people that they are talking to now may not be the same people in a few weeks or a few months.
John, thank you so much for getting us up to speed what to watch this week as, again, the progression, really, as far as trade talks go. Let's get to some other geopolitical stories we're following at this point. A draft presidential executive order circulating among U.S. diplomats proposes a sweeping reshaping of the State Department. Now, the document says the changes to be made by October would eliminate dozens of positions and departments, including those dealing with climate, refugees, democracy, and Africa. In a post on X, Secretary of State Marco Rubio called the reported overhaul fake news. Now, Elon Musk has revived his long-awaited plans to visit India after speaking with Prime Minister Narendra Modi. The Tesla CEO had been due to visit a year ago, but postponed the trip at the last minute, citing pressing issues at the auto company at that point in time. Tesla has long wanted to enter India, but disagreements over import duties and local manufacturing commitments have certainly stalled the progress there. Yep, want to watch this week? We'll leave you with a look at markets. Equity markets are largely on offer. U.S. futures off by about 0.5%, along with other dollar assets coming up on your screen shortly. The dollar is on offer. Bloomberg Dollar Index now trading at the weakest or lowest level since September of last year. Plenty more ahead. This is The China Show. Yeah, just an update here. So the loan prime rates came out this hour, and unexpectedly, unchanged here in the 1- and 5-year rates, kept on hold. We were largely expecting a reduction in certainly the best rates available to prime banking clients today. Now, the initial reaction coming out of Bloomberg Economics, and again, just to caveat this, the backdrop is really of one where we've seen almost on a daily basis either a sell-side bank or some of these brokerages reduce their growth forecast for China and also globally, right? And I think Bloomberg Economics also recently reduced their growth projection for China to 4.2%. And to the point that David Chu, our economist, is making here, the window is closing for a reduction there. We have been waiting. I think it's almost going on 2 weeks now. We have been waiting for aggressive easing to come through out of authorities. We've yet to see something along those lines. But again, the fiscal burden is now really coming more into play with the other story that Min, our China correspondent, talked about earlier on, front-loading some of the fiscal spending in ways that, you know, one would normally not expect. A lot of the companies, private sector companies, are now extending their support for the economy, whether that's coupons, what have you. More on this in a moment, but as far as the monetary policy component is concerned, not a lot there so far. Okay, let's, here's a look at what's trending in China, a look at really what's making headlines in national newspapers and trending on social media. In the slide, I said you've missed it. Amazing pictures on the weekend here. Some of China's best humanoid robots took on the challenge of racing against, people over the weekend. Half marathon. It was billed as the world's first half for androids. Just 4 out of the 21, though, robotic runners completed the race within the allotted 4 hours. And the man versus machine competition, which was presented as a showcase competition, if you will, China's ambition to develop AI and, of course, advanced semiconductors. And an editorial at the Global Times lauded the exercise in, just to frame that differently here, that the robotics advance is explaining that such research is a longer-term journey. The article also says the event embodied resilience with a live broadcast, proving the country's confidence in high-tech industries. Avril.
Yeah, let's take a look at how some of these robotics-related stocks are faring on the back of that marathon sprint, right? And we're seeing how they're firming up today, not by much though, maybe about 1% each, and this is against the backdrop, of course, of a bit of softness overall when it comes to mainland China equities. Taking a quick look at the benchmarks as well. Ooh, looking a bit higher as the session progresses. Interesting that we're seeing about 0.4% higher on the CSI 300. We'll have a lot more on the way in the next hour. You're watching The China Show.
Welcome back. You're watching The China Show, a live picture there of Lu Jiazui in Shanghai, where obviously the Shanghai Comp is trading. Shenzhen is also open today. Hong Kong is shut. So CSI 300 about an hour into, well, not an hour, going into the back half of the hour session right now. 0.3%. Price is just coming off highs a little bit, light volumes. Turnover on Friday, because markets were shut in Hong Kong, maybe as a function of that, and other markets too. Turnover was actually the lowest of the year on Friday, and it looks like we'll be tracking around those levels going into today. We're now closing in on about 300 billion renminbi of turnover in the first half hour of trading. Just to give you a sense of what the average is for the full day since the DeepSeek moment, it's about 1.5 trillion, right? So we're nowhere near those levels. Right, you have a couple of other markets that are shut today, Oz and New Zealand. You have some markets up and running. Of course, Japan is front and center given the dollar weakness is playing out as far as yen strength is concerned. 141 handle on dollar Japan. Nikkei's off, underperforming really most in the region today, down about 1%. S&P futures and European futures are also reflecting some broad risk aversion out there. Taiwan up and running for about an hour, down about 1% as we look at this slide in assets today. Now, speaking of slide, dollar index, left side of your screens. Dixie gap lower today. Bloomberg dollar index flirting with the lowest since 2023. Coming up on your right side. In fact, we are now at that level. I can tell you now. 1218.02 puts the Bloomberg gauge at the lowest since 2023. We talked about the dollar weakness coming through, down just across the board here, Avril.
Yeah, and we're seeing how I think macro traders are really just expressing themselves. There's that angst in the market, concerns on the Treasuries, short and long end as well. A lot to rake through. Bloomberg and life strategist Mark Cranfield joins us in the studio. So, Mark, what are you seeing in terms of the implications, the way that macro traders are just expressing this angst in the markets?
It's pretty much across the board. It is unusual on a Monday. Immediately after Easter is typically a pretty quiet day in Asia because most European markets will be closed. Nobody would expect big market moves until America comes in later in the day. And yet here we are, we're seeing reasonable volumes going through. US equity futures are lower, long bond futures are lower, and the US dollar is lower. That's a very clear signal that people are not too keen on US assets for the time being. Macro traders are clearly getting involved here, expressing this view that there could be worse to come if the trade talks don't fulfill themselves pretty quickly, if we don't get resolutions, if the world trading situation doesn't improve, and people have to continue to take a defensive view. All these things can happen. And that's even without the pressure for Jerome Powell as well, who over the weekend, his job seems to be in some sort of jeopardy as well. And of course, people have latched onto that in addition to all the other things going on. So you put all that together, it's a negative outlook on what people think about the US, how their credit rating may stand, what it means for their onshore markets, and where the money may be going. We're seeing good moves for the euro, the Swiss franc, Japanese yen. These are clearly the kind of havens that people are grabbing for, and obviously gold is doing pretty well also.
Yeah, Mark, 141 on dollar yen. I would imagine at these levels we're back to, I think, September levels when that was weeks after that carry trade, the painful carry trade unwind. I mean, 141, 140, are we about to see some specific triggers here that might actually lead to more downside on dollar yen? And what would be the cross-asset implications of that if we do see ourselves in that situation?
Well, the interesting thing, as you say, I mean, is a big yen move, but this time it's not just about the yen. In September, dollar yen briefly dipped below 140, 139.60 something, I think was the low there. We may well revisit that level. What we didn't have back then was the momentum in the other major currencies as well. And the euro is the missing link compared to what we saw last year. Clearly, there's a shift in mentality that is questioning the reserve currency status of the US dollar. It's early stages, and there's no doubt the US dollar is still the most widely held by central banks around the world. But it's gradually, the amount of those dollars is gradually being reduced. The euro is the most obvious place for people to go to as they shift out of the dollar, because that is the second biggest trading currency in the world, with the yen next. So that's where you would expect the flow to start to go. And of course, these days, it's no longer a question of the yen doesn't deserve to have some people invested there, because there are yields to play with now. We're no longer talking about zero or negative rates in the yen. If you look at the long end of the Japanese curve, we're getting close to 3%. So clearly, interest rates are no longer a deterrent for not owning the yen. Similarly, with the euro currencies as well, they've got decent yields, and the European Central Bank is doing its best to try and keep Europe afloat as well. And we've seen a change in mentality by the leadership there as well. So for once, you have alternatives, serious alternatives building against the US dollar at a time when people are beginning to question the direction of what the policies mean, self-harm in the case of the US dollar and some of the equity moves as well, and the threat that the US yield curve could stay steep for a long time because stagflation is heading the US way. Investors don't like the look of any of this, and stagflation especially is something is very hard to deal with for the fixed income market.
So what we're really seeing is this environment where the likes of Japan, Europe, everything that's happening there is making it a lot easier for investors to punish US assets. You alluded to this a short while ago when it comes to stocks. Of course, we are watching out for some of the big earnings, including from a number of the Mag 7s this week. How bad do you think it could look from here on out?
Well, probably the one that people are going to watch the most is Tesla, because it's a big driver of sentiment in the US. When equities in the last year, it almost seemed to be no alternative. Everybody was rushing to the United States, especially to the big tech stocks. And Tesla was the prime example of that, particularly immediately after the US election in November. There's been a huge reversal there as people question the whole idea about whether the premium for US tech stocks is justified, particularly as China is beginning to come along with DeepSeek related activities as well. So that's already in question. And now we've seen that Tesla sales have been declining in various parts of the world. So what they have to say about their outlook this week could be as important for the whole US market as it is just for that company. So clearly there's room for a lot of volatility around the Tesla stock. If that one gets dragged down further, it will be a very negative read across, not just for the US markets, but for tech stocks around the world. Everybody will have to readjust if there's a big sell-off there. If we get a nice surprise and Tesla comes out with something very positive, it'll be blue skies for the rest of the week. But it is clearly a very big event in global markets this week.
Mark, just to pick up on that last point as a follow-up then, speaking of tech stocks, how do we need to be looking at NVIDIA? I think last week we saw not just Jensen Huang in China, Jensen Huang in a suit at that. And, might that be able to allay some concerns over NVIDIA? And how does that then go into the broader tech story?
People will definitely be looking for anything more they can get from Mr. Jensen and from NVIDIA in general, after he was brave enough to put a number on how much it may cost him in terms of these tariffs which have been put on one of his specific chips. To actually go publicly and say that it could cost him $5.5 billion in write-downs is, he may regret his honesty in some respect. He probably has to because of filings. But that is a very clear number for people to work with. They will now be looking for anything which increases or decreases that kind of number. They'll be looking for other companies as well to go ahead and say what it's going to cost to them. And we're really in early stages of this. This is just preliminary estimates about how far it could go. The numbers could get larger, and it could be more people having to say the same kind of thing. Clearly, this has shocked investors. Once they're willing to think it takes time to do trade deals and it will be a little bit longer for the gestation period to come through in markets. But when people say, this is going to hit my P&L and by these big numbers, that's a shock to equity investors. Very hard to come back from that unless they can find a way of modifying it and say, actually, it's not as bad as we originally thought.
Yeah, particularly for a stock like this where, the argument just as recently as a few months back, Mark, something that's priced for perfection, and clearly the reality hasn't even come close to that. Mark, thank you. Mark Cranfield in Singapore for us there. Right, just ahead on the China show, again, we're taking a step back. The big story, as Mark was pointing out there, the intersection between geopolitics and profit margins. We'll now be taking an assessment of the success of President Xi's charm offensive in Southeast Asia as the Trump White House forces trading partners to take sides. More with the Brookings Institution coming up next. This is Bloomberg. Good morning, welcome back. You're watching The China Show. Just a couple of dates to mark on your calendar this week as we continue to track really this evolving geopolitical stories. We went from tariff and threats to, in some cases now, you have several fronts in East Asia now looking to progress in trade talks with the U.S. You have Japan, of course, we talked about that. You have this line coming through out of Yonhap News in South Korea. April 24th is the date being given there. We'll talk more about Thailand and the trade talks there because that's taking place a day before the South Koreans. And then you have, of course, the evolving relationship with parts of ASEAN with the U.S. And, the reason I bring that up is you have the Philippines and you have the U.S. beginning their flagship annual military drills today, deploying, get this, around 14,000 troops in locations facing Taiwan and the South China Sea. Let's bring in Neil Jerome Morales joining us out of Manila to talk us through these annual military exercises. And Jerome, it really can't take place against a clearer backdrop of this sort of tug of war. ASEAN in the middle, you have the U.S. on one side, and you have China on the other.
Yes, definitely. Good morning from Manila. The main messaging here is that the Philippines and the U.S. are treating these exercises as a rehearsal, a battle test of the Philippines defense plan. This is now on its 40th iteration, and they are calling it the Super Bowl of all exercises in this part of the region. So with 14,000 troops, 9,000 from the U.S. alone, partners including Australia and Japan are also expected to participate, and over a dozen countries are invited to observe the exercises that will run until May 9. And for the first time, the drills will include a Nemesis coastal anti-ship missile system, which is a promise that U.S. Defense Secretary Pete Hegseth made last month in his Asia tour, that it will be deployed in the Philippines.
Jerome, you talk about how this is sort of like the Super Bowl. What are the broader implications for the Philippines and the Indo-Pacific region?
Yes, indeed. These exercises comes amid continuing tensions between Manila and Beijing over parts of the strategic waterway, which is the South China Sea. And on the broader picture, the bigger picture, these drills will happen as China and the U.S. are in the heat of a tariff war. But this goes to show that, at least for now, U.S. President Donald Trump is still committed to the Indo-Pacific, to countering China, despite worries initially that he will focus solely on his U.S. policies.
Jerome, thanks so much for giving us the lowdown on these activities underway. Bloomberg's Neil Jerome Morales in Manila. And of course, we've also been tracking what's happening or coming out of Thailand with the Prime Minister there, Paetongtarn Shinawatra, saying that a delegation will meet with U.S. counterparts on Wednesday to negotiate a deal on the 36% reciprocal tariffs imposed by President Trump. It'll be led by Finance Minister Pichai Chunhavajira, who will present proposals to reduce Thailand's $46 billion trade surplus with the U.S., David.
Yeah, in fact, just on these bilateral links and trading negotiations taking place, the Ministry of Commerce put out a statement talking about how, well, it's effectively China is opposing deals that the U.S. manages, if they do manage to reach a deal, manages to reach with others that come at the expense of China, and they're firmly opposing any party reaching a deal at the expense of the country's interests. That's according to this Ministry of Commerce, and China is vowing to take countermeasures under such situations. Let's talk about the geopolitics that underscores this charm offensive that we saw, of course, from China in parts of Southeast Asia last week, and how that story evolves moving forward. Let's bring in Lynn Kuok, the Lee Kuan Yew Chair in Southeast Asia Studies at the Brookings Institution. Good morning from the Asia Pacific. Thanks for taking the time. I know it's slightly late, your side of the world, so thank you for staying up for us. So we're coming off a 3-country visit. What's next? Let's start there. What's next for President Xi Jinping?
I think before we go on to discuss what's next, it's important to look at what was achieved on this 3-country visit. And to assess how President Xi Jinping did in Southeast Asia, one first should look at his goals, which I suggest are twofold. First, to blunt U.S. trade pressure and to present China as a steady partner. And second, to present China as a steady partner. So those are his 2 goals. Did he achieve the first? I think it still remains to be seen. As for the second, I think it's fair to say that the trip was strategically and symbolically very important step for China. China signed 113 agreements. Some were binding, many were preliminary. But nonetheless, what they were able to show was that China is present, and very much so, in the region at a time that U.S. engagement is absent or even punitive. And even from ASEAN's perspective, the trip had value. So even if very few of these agreements materialize, and it wouldn't be the first time that China has come bearing gifts without all of them necessarily materializing, I think the trip allows the region to signal to Washington as it conducts negotiations over the high and punitive tariffs that many of them, or all Southeast Asia is facing. It allows them to show that Washington, to signal to Washington that the region has options, and where the United States falls short, China might step in.
Right. So then, that segues the initial question. Then, what's next here?
Well, it's not clear what's next, but I think we can look at how China has approached the region in the past to suggest what's next. If you're asking about what's next in the region, China has, through decades, actually ensured that its engagement with Southeast Asia has been sustained and committed, whether in the diplomatic or economic realm. I think China has been very successful. It's the largest trading partner of all of Southeast Asian countries, and also a major investment partner. So we see ties moving forward in that realm, and I suspect they will move further forward with U.S. tariffs across the region. I think what we will also see, however, is that China there might be a ceiling in terms of how much countries can engage strategically with China, at least given the South China Sea issue, which remains very much a thorn in the side of relations, at least with countries like the Philippines and Vietnam, who have seen increased Chinese incursions into their waters in the past year or so, or year and a half. In that respect, I think that will, constrain China in terms of its engagement with the region. That said, the region has been, most countries in the region have been very careful, and even the Philippines has been quite careful to ensure that the South China Sea dispute is not the sum total of their relations or their bilateral relations with China. And it's only one issue in the multifaceted and deep engagement that it enjoys with China. And of course, China has a choice in this respect. It can dial up or dial down its activities, its offending activities in the South China Sea. And in that respect, it should be able to forge deeper ties with the region if it decides that it would be better served by settling its disputes with its neighbors, or at least the maritime disputes with its neighbors in the South China Sea, even if the territorial disputes remain intractable.
Yeah, China's also continuing to balance all this with diplomacy, with economic incentives as well, as you share with us. But when it comes to how ASEAN leaders are assessing what China can bring to the table, I mean, you kind of suggested earlier that, not all of the promises materialize. And this is, of course, coming at a time when China, its own economy is being jeopardized. So what exactly can it bring to the table? How do you think ASEAN leaders are assessing this?
I think it's important to look at some data. It's not conclusive, but it might be indicative. So in 2024, the Institute for Southeast Asian Studies conducted a poll of Southeast Asian respondents. And in that poll, they found that when asked who was the most influential economic power in the region, China came out on tops by far. So 60% of respondents selected China, and the United States trailed behind by only about ranking only about 14% of respondents selecting the United States. The United States' position improved marginally in 2025, and China's dropped marginally, possibly reflecting its economic downturn. But even then, China was selected by 56% of respondents as the most influential economic power in the region. When we look at what China brings to the region, as we mentioned earlier, or as I mentioned earlier, China is the largest trading partner of so many countries in the region. And while the United States remains the largest investor in the region, a lot of US investment is actually concentrated in a single country, namely Singapore. Now, with the United States imposing tariffs on the region, though it's suspended that, I think the concern there is that the United States might not even meet its might not even be able to achieve its lesser economic role in the region as compared to China. So even if China's economy sees a downturn, I think it's still the trajectory, or the economic trajectory, and the reliability that China is perceived as a partner. I think China still perhaps might do the United States in that realm. Now, the United States does not need to match China dollar for dollar in the region for the region to continue engaging with it. I think the region clearly wants to continue to hedge between the two powers and also engage more powers beyond the United States and China. It's very important for the region's strategic options. Nonetheless, I think it's important to note that China is gaining ground in the region, at least in the economic domain.
Yeah, and it's worth noting as well that Southeast Asian countries have so far been doing quite a good job in balancing out the US and China, and this is despite, the sentiment that eventually they will be forced to choose. But I would also like your thoughts when it comes to the tariff levels that we've seen from Trump, albeit suspended. Vietnam, Cambodia, those were the two countries the hardest hit. Singapore, relatively not as badly hit. What do you think the China plus one strategy being kind of curtailed here is going to mean for the winners, the losers in the region?
I don't want to speak so much on the economic aspects of things. I'm here to speak about the geopolitical implications. But I think if we look at the geopolitical implications of these tariffs, they might well be severe. The United States has imposed tariffs across the region, and on some of the country's poorest countries, some of the region's poorest countries, as you mentioned, Cambodia, a tariff of 49%. Vietnam, 46%, Singapore, 10%. But as the Singapore Prime Minister pointed out in his speech before Parliament, it's not only about the percentage tariff that is imposed on each country, but also what it means for the economic order, the global economic order moving forwards, and whether or not we will see free trade, which has benefited the region and allowed it to prosper and to see peace, whether that will be the name of the game moving forwards. And China has been able to present itself as the defender or the champion of free trade as the United States retreats into protectionism. And I think that might well have geopolitical implications that we should all be watching very closely.
Certainly, there's a lot of realignment in the global order underway. Lynn Kuok, Lee Kuan Yew Chair in Southeast Asia Studies at Brookings Institution. Thanks so much for sharing your insights with us. Plenty more ahead. This is Bloomberg.
Welcome back. An update on FX markets. The dollar slide is accelerating more than 1% now on dollar yen to the downside. We've taken out 141, and soon enough, and by the way, London hasn't woken up yet to this, 115. Could that be in play on the euro? Plenty more ahead. This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets about to go on break in a minute, and we're seeing that downdraft on Japanese stocks. A lot of this, of course, has to do with the moves in the Japanese currency that's dragging these export-related counters. Dollar yen now fast approaching the 140 handle, and of course, this is against the backdrop of the massive slump in the dollar that we're seeing in the early goings of this Monday. Yields also slipping slightly. We're seeing the 10-year in Japan around the 130 handle. Now, in terms of the stock performance, if you're looking at the topics, it's almost every sector that is down today, save for land transport as well as fisheries, agricultural industries. The bottom performer today, David, it's the Marine Transport Index, interestingly enough. And I guess that's also feeding into what we're watching out for in some of the other sectors in East Asia.
Yeah, that's marine transport, Avril. You're bringing out the fancy words here. That's just really another way of saying ship makers, right? And I think that's where you're going with the shipyard stocks in Korea. And this goes into the broader tariff conversation, right? And I think the latest downgrade coming through out of Nomura here, downgrading the demand for Korean, and certainly that's playing out as far as that's concerned. The stronger yen story isn't helping, certainly, and this headline just crossing the Bloomberg terminal, the Bloomberg dollar index has now taken out the low of September. We're now effectively trading at the weakest since the start of 2024. That's extremely also close to 2023 levels here on the Bloomberg dollar index. Right, just very quickly on the shipyard stocks that we were just teasing through there as well. We're looking at quite some sizable declines there. There we go, in the order of about 4% in some cases, really as the, it's really starting to make itself felt as far as the impact to margins. We've heard from NVIDIA, they've attached a number to tariffs. We've seen a slew of downgrades in terms of growth projections. In fact, I think the Bloomberg Economics earlier on talked about how why they downgraded their view on the Chinese economy. It's really a massive export hit that they are expecting there as well. Now, that takes us really into the China story, because Beijing says it is firmly opposed to any party reaching a trade deal at the expense of Chinese interests. It follows reports that the U.S. is now looking to pressure other countries to curb trade with China as part of their reciprocal trade negotiations. Min Lo, our China correspondent, has a response out of the Ministry of Commerce plus the other stories. Let's start with the response first.
Yeah, so it's a clear warning from China that they are going to watch these trade negotiations very closely, and any country that cuts a deal with the U.S. that undercuts Chinese interests is going to face retaliation from China. No specifics on what sort of countermeasures China will take, but it is a warning shot here, and I want to read you a quote from the Chinese Commerce Ministry saying that to seek these exemptions at the expense of others' interests is to seek the skin of a tiger. Ultimately, it will fail on both ends and harm others without benefiting oneself. And here the Chinese government is in some ways alluding to the idea that the US may not be that reliable of a partner. I mean, you look at what happened to Canada, they strengthened the border, but they were still slapped with tariffs. So the idea here is that cooperating with the U.S. may not necessarily yield the benefits that you're looking for. So China's narrative, they're really countering themselves as this other much more reliable, stable partner, especially after presidency made those visits to Southeast Asian countries, offering all these dozens of deals and really saying, you know, we should all come together, have regional solidarity and counter the global hegemony. And the question now is what is next, and whether the U.S. will be successful in getting its allies to encircle China, because we have seen the likes of the Spanish Prime Minister visited Beijing, really in defiance of the threat from Scott Bessent. You have the Malaysian Prime Minister piling praises on presidency. So this is a lot of moving parts here, because the tariff war between US and China is now spilling over to the rest of the world as well.
Min, what about domestically when it comes to support for the economy? I mean, you were talking through all this earlier on in the program as well. But in terms of government spending, what more can we expect? And does China have the fiscal headroom?
Yeah. It is fiscal and monetary policy, right? Because this morning we also had the LPR rates that remain unchanged, and Bloomberg Economics had a pretty strong stand on that, saying that China is really wasting precious time with the delay in any monetary policy easing, despite the government and the central bank repeatedly signaling that they are going to ease monetary policy. So the timing and the scale of the stimulus is really something to watch. And of course, it also depends on how the US-China trade talks go. But in terms of what the government will do, I think it's really interesting to keep a lookout for what happens after the April Politburo meeting, because Premier Li Qiang did call on Chinese officials to, quote, think out of the box when it comes to economic stimulus policy. So what else can they do? And one thing we have seen over the weekend is to help these companies, these exporters, to divert their sales to the domestic market. And to that end, we saw some of these big e-commerce platforms coming in to step up to do their part. JD.com, for example, pledging to put aside 200 billion yuan at least over the coming year to commit to buying goods from exporters, to hold them and to direct these consumption flows to the domestic economy. So what else we'll see after the April Politburo meeting will be something to watch very closely.
Yeah, deploying some very creative strategies, some of these Chinese e-commerce names. China correspondent Min Lo for us there. And of course, we've been tracking some of the people movements. The U.S. Vice President J.D. Vance due to meet with India's Prime Minister today as Narendra Modi seeks to avoid a 26% so-called reciprocal tariff rate. Bloomberg Shruti Srivastava joins us from New Delhi with the details. So, Shruti, what are we expecting out of this meeting?
So, as you said, U.S. Vice President J.D. Vance is on his first ever official visit to India, and he's on a 4-day visit to India, during which he's expected to meet Prime Minister Narendra Modi and senior member of his team. Now, of course, the meeting comes weeks after Trump slapped the so-called reciprocal tariff on some 60 nations, including India. The two nations are engaged in a bilateral trade negotiation, and the Vance visit is expected to further boost it. So obviously on the agenda is the trade negotiations which are happening right now. Modi, during his visit to Washington in February, Modi and Trump, they both had announced that the two nations will have a bilateral trade agreement by fall of this year, at least the first tranche of the deal by fall of this year. And this 90-day pause, which is there, officials in New Delhi are viewing this 90 days pause as a window of opportunity to expedite the trade talks and conclude that deal as quickly as possible. So, of course, this visit becomes crucial in view of that. Of course, the trade is going to be one of the top issues which Vance would discuss with Modi and his team. But, of course, in the Indo-Pacific region, through India being a member of Quad, India's presence becomes increasingly critical to the U.S. As it's being, increasingly viewed as a counter to an assertive China. So they are also going to discuss regional security cooperation. They're also going to discuss deepening of trade ties in defense, more energy security. The two nations have also agreed to build a resilient supply chain in critical minerals, pharmaceuticals, and semiconductors. So these are some of the key issues the U.S. Vice President would be discussing with Modi when they have their meeting in the evening today.
Shruti, David here. I'm trying to rack my brain, and I'm about to ask you about Elon Musk and the potential India trip there, because I think it was, and if you recall, please remind me, I think it was about 12 months ago, if not almost to the day, that Elon Musk was supposed to go to India, and then I think plans had changed. He then made that surprise visit to Beijing, and how the tables have turned, I guess, 12 months on with the U.S.-China conversation taking place, and now India might be a good opportunity for Elon Musk and his businesses. What do we understand about a potential trip there from the billionaire?
Absolutely, Dave. So Elon Musk was expected to visit India last year, and he had announced that visit on X, only to, cancel the trip and go to Beijing instead. And that was a dampener for officials in India who had already given a lot of concessions to electric vehicles, and which was one of the key asks for Tesla. So that disappointment, I think Indian officials have overcome that disappointment, and now Musk announced on X again that he would be visiting India sometime soon. Narendra Modi and Musk also had a conversation last week on deepening their partnership in AI and in semiconductors. So the tables have definitely turned. Now India is increasingly again trying to woo Tesla. It's Starlink. Musk's Starlink has already entered into a partnership with two of the leading businessmen in India, Reliance Industries and Airtel. So that partnership is also secured. So Starlink was facing a lot of hurdles in its entry in India. It seems that those hurdles might be taken care of now. And Tesla has also opened two showrooms in Mumbai, in India. So it seems that the entry for Tesla is being smoothed out by the Indian officials. And this is a great opportunity for India to have Tesla, plus for Musk to enter a potential market of 1.4 billion people. So indeed, the tables have turned, as you rightly said, Dave.
Shruti, thank you so much for an update on both those fronts. There's Shruti Srivastava there, of course, on the latest. Speaking of Tesla, just an update here separately here on some other corporate stories we're tracking at this point in time. So we have this report out of Reuters talking about Tesla's planned rollout of its cheaper cars, including the low-cost Model Y, has reportedly been delayed by at least 3 months. Now, the Reuters report did not give any reason for the delay. Now, Tesla is due to report earnings on Tuesday, with investors looking for guidance really on how it intends to turn around its shrinking market share. Now, Boeing has begun returning 737 MAX jets to the U.S. that were refused by Chinese airline customers. According to data from Flight Radar 24, a jet intended for delivery to Xiamen Air flew back to Guam after arriving in China last month. Now, Bloomberg reported last week that China has told state-run airlines to stop taking delivery of Boeing jets. Plenty more ahead here on the China Show. Okay, I'm struggling to get the words out, and it's only Monday. It only gets better from here. That's the hope. This is Bloomberg. Welcome back. Right, just to get you guys up to date here on, or up to speed on some of the broader tariff conversations taking place this week. So again, just to make it very, very simple, we've been talking about some of the progress here. So the Japanese, of course, will be holding talks with the U.S. and certainly the continuation of the momentum we saw from last week. We also now have a date coming out of Yonhap news as it pertains to South Korea. That's on the 24th of this week. And a day before that, just to wrap things up, as far as what we know, is Thailand is also expected to hold trade conversations with the United States on the 23rd. So that's a day before the South Koreans. So it's going to be very busy as far as that goes. And, of course, we'll try and stay on top of the story here for you guys as well. Right. Now, back to the Japanese side of the conversation here. So Ishiba, of course, the chief cabinet secretary here, talking about how we're looking at, well, as far as what might go into the trade negotiations here, talking about how there needs to be a proposal to the U.S., including security matters, that they don't expect left-hand drive cars to sell as much in Japan as you would expect, because they drive on the other side of the road there. But anyway, talking a little bit too much here. Let's bring in John Herskovich right now to help us understand where we are exactly on these trade negotiations taking place. Yeah, John, why don't we start off with what we know now on the Japanese side and what precisely looks to be in the table given the latest lines that we know?
Sure. We have Finance Minister Kato is heading to Washington this week for IMF World Bank talks, and he's supposed to have a round of trade talks with U.S. officials, including Treasury Secretary Bessent, which may actually coincide with about the same time as South Korea. Now, over the weekend in Japanese media, we've seen some things being floated which may be on the table for the talks. One which you mentioned was autos. Japan is could be looking to reduce some safety standards, inspections, seen as non-tariff barriers for cars. And the effective rate for U.S. cars in Japan is about 0%, but the cars just don't sell here. As you mentioned, Japan drives on the other side of the road as the U.S. Sometimes U.S. automakers send over their American versions with what Japanese see as the steering wheel on the wrong side of the car. But that's one of the things which may be up for debate. Another thing which was floated in Japanese media is some agricultural stuff. High tariffs on rice here, trying to buy more U.S. soybeans. So these could be things that are part of negotiations which Japan sees as a way to perhaps get a deal going forward.
Yeah, and at the same time, Ishiba is saying that they need to make a proposal to the U.S., including on security matters. But talk to us as well on the South Korea side. What would a proposal or a package from trade negotiators to the U.S. entail?
Yeah, we've seen some bits of it before this, the announcement of the talks, which are coming about sometimes Japanese. South Korea was looking for some big deal stuff. An LNG pipeline in Alaska was one of the things. President Trump has tried to get some cooperation on shipbuilding. South Korea is one of the world's biggest shipbuilders. So these are some of the things that South Korea has proposed. But South Korea also has some exposure, more than Japan, on things like auto exports to the U.S. Hyundai, Kia, among the cars that they sell to the U.S., it's one of the highest amount that come from Korea to the U.S. for sale. And these are some of the things that are being subject to the tariffs. One thing to keep in mind in South Korea is that it's having presidential elections in June. The current government is, we have an acting president. All of this could change rather abruptly with South Korea's position. The front runner for South Korea's election is a progressive Lee Jae-myung. He's seen as a bit more China-friendly, perhaps not as amenable to the U.S. So what's being talked about now could change from South Korea's perspective in just a matter of a few weeks. Just something to keep in mind as South Korea and the U.S. head to the table.
John, thank you. John Herskovich there getting us up to speed here on really what's turned out to be a fast-moving story on information around these trade talks set to take place this week. Now, might the currency be part of that? Might a stronger yen help things along as a byproduct of these bilateral conversations here? Dollar yen now has a 140 handle. Yes, you heard that right. We did take out the 141 to the downside. Now puts the yen at the strongest level against the U.S. dollar going back to September of last year. That's a 1% move. That's a move we don't normally see, but it really comes down to many strands of the dollar story, credibility of U.S. assets, the Fed conversation, and Jay Powell's job. Plus, broadly speaking, stagflation concerns in the U.S. might be further driving money out of dollar assets. Let's bring in Nomura FX strategist Yujiro Goto joining us from Tokyo right now. Yujiro, thank you so much for joining us. I understand you recently revised lower your forecasts for dollar yen. What's the new forecast now and why?
Yes, thank you very much. So, yes, we have downgraded our dollar yen forecast last Friday, and we now expect dollar yen to weaken toward 137.50 by end of the year and further toward 135 next year. So the our outlook is still quite a gradual pace of the dollar yen weakness into next year, but we are seeing some downside risk to our new forecast to break 140 more quickly than we currently expect. So clearly, this is mostly because of U.S. dollar weakness rather than yen strength. But still, we have to say there are several risks for further yen strength acceleration against U.S. dollar and other currencies. The first one is U.S.-Japan trade negotiation, which can potentially lead stronger Japanese yen. We are not expecting a big agreement between U.S. and Japan to weaken the dollar yen anytime soon. For example, at the meeting between Finance Minister Kato and Treasury Secretary Vance this Thursday, this week. But still, the market is likely to keep in speculation about yen strength due to trade negotiation into next year. And also, I have to say, Bank of Japan is still somewhat more hawkish than other major central banks. Last week, ECB decided to cut by 25 basis points, while Bank of Japan still suggests rate hike is possible if the outlook materializes. So the bias is more for rate hike, not rate cut in terms of BOJ policy, which is also supporting the Japanese yen at the moment. And also, I think there is a potential for more portfolio shift away from the U.S. assets into domestic Japanese assets. And the recent flow data, weekly flow data already suggests a big, foreign buying of both U.S. equities and the U.S. bonds since the beginning of April. So I think flow pictures are also quite supportive for Japanese yen at the moment.
You're talking about all these factors supportive of the Japanese yen, $135 yen, that's the target or the forecast for next year. But what about the extent in which you think the currency will be brought up in these bilateral talks?
I think actually this is not necessarily the timing even for the U.S. side to weaken the U.S. dollar, in my view, because now the problem is stagflation in the U.S. economy, and the weaker U.S. dollar can make the situation, inflation situation, even worse from here. And also, we had a big instability in the U.S. Treasury market recently, and if U.S. government, Trump administration wants has quite strong pressure to devalue U.S. dollar at the moment, I think foreign inflows into U.S. Treasury market will be much weaker, especially from Japan or China. So the further instability in the U.S. Treasury market is possible if U.S. side is pushing weaker dollar policy strongly at the moment. So
really appreciate you sharing your insights forecast with us, especially at such short notice. Thanks so much, Nomura FX strategist Yujiro Goto with us. Plenty more ahead. This is Bloomberg.
Welcome back. Very brief look across some parts of the market here. Gold remains bid. As you can see, 3,400's now in play. We're up 2%. Gold miners as a function of that. Point number one. Capricorn is a stock we're tracking to. Big gains there, out with earnings and also out with an upgrade out of Sealand. Brokerage are up 7% in the onshore session today. And we're looking at crypto-related, and crypto basically up almost across the board here. Bitcoin, Ether, and Solana. Decent gains. If you ask me why, honestly, I don't know, but sometimes this happens. If you ask me why George Lucas was able to predict how C-3PO would act in and run in real life 40 years ago, and that's exactly what we saw out of the Beijing Marathon and androids racing to the finish line there. There's lots we don't know, and certainly you have to be dissatisfied with not knowing. I'll leave you with that philosophical note. We'll see you all tomorrow. Happy Monday. This is Bloomberg.